39-cent bid, 40-cent ask. These are guys that know what they want to do, and you're not going to be able to get one up on them. So on that note, a little bit further, if I forced to, I'll pay $39.40. I need to get that average down. I might reconsider the volume, how many I buy, just so that I leave my powder a little bit dry. The other thing was, I was quite happy with myself for being able to predict what the markets would do on this Friday. If you followed in an earlier episode, I did a quick back of the napkin analysis of the Dow, what happens on Thursday and how it's going to affect the markets on Friday, and I found that 9 times out of 10 that Friday is going to follow Thursday, and it did. Thursday was a nice up day. We had a good up day, and Friday was, up to flat. So it pretty much fell in where I wanted. Another factor that, besides the bid-ask spread being tight, another factor that is causing me to take my time on this next move is the correlation between the VIX and the Dow. I'm trading options, okay? And options are insurance on your portfolio. So generally the way it should work, theoretically, is if the Dow is up, the VIX is down, okay? Because the VIX is representing the cost of options. Options are insurance on portfolios. So you got big guys out there with hundreds of millions of dollars, or tens of thousands, or hundreds of thousands of dollars, and they've made a lot of money. And they want to keep that money. And then they can buy an option for pennies on the dollar in order to ensure that they keep that money. That's what they're going to do. So the way it should work is that when the Dow is up, the VIX is down. If the Dow is down, the VIX is up. When I see that sort of correlation, then I know that the market's working as expected, and that I can make my moves because I know that the market will behave as I'm expecting it to. That hasn't been happening. The Dow was, flat to up, I think up 41 points. The VIX was up 6%, okay? People are scared. They're buying insurance. People are scared. I'd like to see the VIX come down a little bit, because that means the price of my options are going to be coming down a little bit, and I'm going to have a better opportunity to buy in a little bit more. But again, just like with the bid-ask spread being tight, if I don't get what I want, I got to live with what I got. So we'll work that out on Monday. We got the weekend to think about this. So following the what, why, and how format, I've completed everything in my why, and we need to move on to how. How are we going to trade this market? I think no matter where you're at in the market and what you're doing right now, you just need to fucking stand pat and watch. I got one eye on the market, and the other eye I've got on research, okay? You need to fill your mind with information so that you can make good decisions. So I've been reading this and that, whatever. And I found 2 really good articles today, which I'm going to have to flip my notepad over here so I can, Barron's. Awesome article in Barron's. It was on GE. It was published on 8/30/2019 at 8:24 in the morning. The guy who wrote it, his name was Al, and I can't read my writing on the last name, but hopefully you can find it. The synopsis of it was really simple. He took and went to GE's annual report and did a word count on the legal liability section. Currently, there are 2,500 words in GE's annual report legal liability section. Comparing that to other companies that have about 250 words in their legal liability section, it looks to me like, GE has 10 times the legal worries that any other company has. If they're talking about it 10 times more than anyone else is talking about it, then they got 10 times more problems. So I think that supports my overall theory, which, if you've watched previous episodes, is that the Dow is bubbling, it's getting frothy, bubbles may be bursting, and I'm picking GE as my surrogate. They're my proxy for the market. They're the weakest of the herd. I know they're no longer a DAO member of the DAO, but psychologically they still are. And I think that it's a good place in order to be able to play these large moves. So the other article I came across, which was really interesting, was on CNBC. There was a guy named Matt Clinch, and what he did, or happened to mention, actually, the article, what he happened to mention was that a speculation that I had made